Now, two stocks I want to talk about. First and foremost, I want to thank everybody who's been subscribed to the channel. Wish everybody a happy Thanksgiving, and hopefully you are all doing well and spending time with your loved ones. And I can't thank you all enough for the support. So let's get into it. Welcome back in YouTube. Today we have a lot to go into, and I'm just going to go right for it here as we have the markets are pretty much up, and the one thing I want you guys to pay attention to is going to be the VIX. Now the VIX is hitting some interesting levels here right around that $19 mark is really where I get concerned that we're going to see a spike up in the VIX and we get a reversal of conditions in the market. Now what I want you guys to remember is long term I believe we are heading into a recession and earnings need to come down. Right now we have earnings sitting around $250 a share, with a lot of estimates bringing it down to $230 or even as low as $200. This still needs to correct within the market. We need to see multiples compress as well, as the Fed's funds rate is going to start pushing 5%. Once we get at that 5% level, we're going to have compression in multiples, meaning the P side of the equation is got to come down. Along with the P side of the equation, in 2023, we have earnings, the E side of the equation, coming down. This is a double whammy on both price and earnings side of the equation, so we have to start factoring in these things. So first and foremost, guys, if you're new to the channel, welcome in, consider subscribing and smash that thumbs up. I want to give everybody a heads up. I'm probably not going to be posting as many videos. I think what I'm going to do is post a video on Monday afternoons, and on Friday nights, I will go live around 4:30 p.m. recapping the weekly market and have interaction with that. So make sure you hit that bell, smash the thumbs up if you find any value in this. Now, two stocks I want to talk about where I think there's going to be an opportunity to buy them very cheap, and I think it's going to be a great place to hold your money through 2023, as I think it's going to be what we saw this past year, where we saw high-flying stocks come down and we saw the tech sector get really hit, minus Apple. Apple's been holding in there very strong, and that is one stock I do think is going to disappoint, especially when we factor in what is going on in China. So I do expect prices to come down in Apple, which holds a massive weight in the overall S&P 500. My expectation is the S&P 500 is going to come down with that. Guys, if we take out energy and utilities, overall the S&P 500 would have had horrible earnings, okay? So if we take out those two sectors, overall you would be very much underperforming, and if you don't have energy or utilities exposure to your portfolio, you've probably done very bad this year. Probably trailed the actual S&P itself. So what are two stocks that are going to outperform and I think can get you through a tough time? Number one's going to be Tyson Foods. We're getting a lot of talk about the consumer, the concern of the consumer, and the possible movement down that the consumer could start shopping downwards, going to the Dollar Tree versus a Target. And when we look at a Tyson Foods, I think they're going to be not impacted at all. And I think they will sell off with the market when we do go into the first quarter of next year. So this is a stock I'm really looking at for 2023. Basically, the beginning of 2023 is where I'm looking at. Analyst expectations are anywhere from a $70 price target all the way up to a $97 price target. Currently, the stock is trading at $67 a share. Me personally, I like it in the mid 50s to high 50s. Basically $55 to $58 is about what I'm looking at personally for Tyson Foods. That gives me a nice yield as well. Okay, if I'm able to scoop up those shares at that price, I'm pushing over a 3% yield on the stock with a tremendous amount of upside and safety built into the stock at those price targets. So that's personally what I'm looking at for Tyson Foods. Now, this company has been in the news. A lot of bad stuff has happened with the company. They had to recall food. The CFO got caught drunk, sleeping in some stranger's bed. So there's been some crazy things here that have disrupted the stock, and it's fallen significantly with the market, going from $100 a share down to a low of $62.94. And I basically needed to break below the recent lows in order to get my price target. But if we look at the chart here, you know, it's a pretty ugly chart overall, but I like the business fundamentals going into the end of 2023. And that's why I want to accumulate shares to the beginning of 2023 if we get a big pullback. Now, Yahoo has this also undervalued by about 14%. Throw the dividend on top of that, you can see that there's some decent upside to this stock and probably not a lot of volatility. As we look at the beta, it's 0.72. So low beta on this stock, not a lot of price movement usually throughout the days. And so this is one stock that I'm personally looking at for capital preservation, guys. I'm not looking to get rich off of this stock, but I'm looking at 2023 and 2024 earnings here, and I'm starting to get concerned with the consumer and the global slowdown. And I do think that there's an opportunity with the war going on, with the shutdown in China. There's going to be a food shortage here, and I think that bodes a really nice setup for Tyson Foods as well. Now, that's a little bit more speculation. I wouldn't be banking on that, but the one thing I do like about Tyson Foods, and something that they've brought up to investors, is this is not a company that grows a lot, guys. There's going to be minimal growth in this stock. The reason why I would be buying it is the misprice of the stock, right? So it gets mispriced. It has a PE ratio currently at 7.5. And I think it can get to that 4 or 5 level of a PE ratio. And that's where I'm really interested in getting the stock, as the company did say they are going to start expanding margins here. They're going to be able to grow their free cash flows a little bit more. That is something that the company dropped, and that is not priced into the stock quite yet. So if we get a market pull down in 2023, Tyson Foods, with all the bad news baked into it, is really set up to run nicely through the end of 2023 into 24, in my personal opinion. Now, that's if you get it at a good price. Right now, I would say it's an interesting target right now, but I would have to be getting it substantially lower, about 12 to 15% lower than where it is right now, before I get too excited about a company like this that doesn't have a tremendous amount of growth, but there is some stability baked into it. It's like I said before, it's a preservation. I'm looking to preserve capital and maybe get a modest gain in this stock. This is a Black Friday deal, guys. Get your tip ranks link down below. Get a massive discount. Your future self will thank you. You still want to be defensive, guys. So my thesis is you still want to be defensive, and you have to find defensive at a reasonable price right now, where that is very hard to find. Healthcare has been on a tear. Anybody on this channel knows that I bought Gilead at 60. It's at 85 in a very short period of time. I'm out of that position now, as I was selling covered calls and got called on it, but it's okay. I made good money, collected a dividend. All is good there. I would probably be buying Gilead back on a dip. Johnson & Johnson's an interesting one if we could get a dip on Johnson & Johnson. Where I'm going to go with the Tyson investment is probably going to take another approach and do a barbell approach, where I take a little bit more risk on, and that's going to be with the semiconductors, guys. I really want to get involved in the semiconductors. I'm leaning towards TSN. I'm leaning towards, I really like Micron, the stability in Micron. Intel, I think, has a lot of things to get over, so I think that's a high risk, high reward type of stock, and I think there's I think you have time to accumulate shares in a company like Intel. I don't think that's anything you need to rush into. But Taiwan Semiconductors is interesting, not just because Buffett bought it, but it's because it's a sector I've been looking at. So I'm probably going to do some sort of consumer staples where I'm on the defensive side and lean towards kind of early bull market. That way there, if I'm wrong, it's okay. Either side of the equation, I bought reasonable consumer staples, which is never a bad buy. And I'm offsetting that with the semiconductors, as that's an area where I think there's massive opportunity for growth over the next 5-6 years. So that's the two areas that I'm really looking at. Haven't narrowed that one down to a specific stock. Have a lot on my watch list, and I feel like if they all are justified a buy at the right price, whether that's Intel, whether that's Micron, whether that's Taiwan Semiconductors, those are ones that I'm looking at. Anytime that they can get to the price target that I'm looking at, I'm probably going to accumulate at that. About buying good companies at reasonable prices. So that's why I'd be looking to go defensive on one side and then early bull market stage on the other side. So that's how I'd be offsetting kind of my barbell approach. And going forward, I'm probably just going to keep this completely open and transparent. When I do buy Tyson Foods, I will probably drop a video on Monday on stocks that I'm buying and selling. But this is probably something I'm going to keep an eye on for an extended period of time. I haven't seen it really hit the price targets that I really want. And this just like Warren Buffett says, you can sit back and wait for your pit. Sit back and wait for the right pitch. You don't have to swing at every stock, right? So that's basically the approach that I'm taking here. Is I'm going to be very concentrated in my portfolio going forward. I'm probably going to only have between 10 to 15 stocks that I think complement each other well, kind of like the consumer staples and semiconductors. And then I'll be doing purchases like that going forward and sharing that with you guys, and you guys can kind of keep an update on how I'm managing that. But as I stated before, guys, I really think it's going to be a tough year for the next few years. When we think about what the Fed is doing, this is unprecedented times. Nobody really has any sort of history on how this is going to be adjusted and digested by the overall markets. When we really think about how fast and how significant these rate hikes are, we have yet to really see them come through the system, and we're already getting layoffs in technology. We're already starting to see some weakness in the consumer. You know, if we're looking at a 200 to 215, you know, S&P 500, we're basically trading right now at a 20 times multiple, which is, you know, overall that's fairly elevated when we look at it through a market history standpoint. We probably need to be trading between a 16 to 17 is about a normal, and anything below that is probably where you find the value in, and that's why I've been using a 15 multiple, is that I think a 15 to 16 multiple makes a lot of sense to find some value. And I also think when we're averaging in a Fed's fund rate above 5%, makes a lot of sense that you want to discount the market a little bit more, as there is competition for capital, right? So these are some things that I'm thinking over and just kind of want to share with you guys. They're kind of just me bouncing some ideas off of you and sharing them with you. So hopefully you all enjoyed that. And as always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.